See what happens here. So, yo, what is up for y'all on the YouTube replay? I don't have a great feeling about today. The Wi-Fi's, I'm not at home right now and it's probably going to be trash, but hopefully we don't have any issues. I can't wait to share with you guys something today for the first time ever. Maybe I'll wait a second for some more people to join the stream, but basically, here, I'll wait to share with you the news. I'll give you a quick portfolio update. We're actually down quite a chunk today. We're down 0.81%, but year to date, we're still doing pretty good. We're up 12% year to date, certainly better than this April dip. You know, during April, we were down 50 or near 15%. So all you had to do was just not sell, just hold through, and you're most likely doing pretty good. Here's my total percent change on every stock. So luckily, we're up on every stock except this one right here. But when you include all the dividends we've received, we technically are up on them, which is pretty cool. Let's see how the market's doing. So yeah, Nvidia's up on some CoreWeave deal today. They're doing great. SoFi's down 6%. We'll actually go check that out. DocuSign's down 10. Wow. What happened with DocuSign today? I might go look into that a little later. But yeah, I'll also share with you my Roth IRA. Hey, Looney, what's up, man? Hope you're having a great Tuesday, dude. So check out our Roth IRA. We're up also 12% year to date in here. And here are all the stocks that we own in here. I actually bought 0.3 shares of Wix today. Wix.com. They're like the only publicly traded vibe coding play. So that's pretty cool. But let me share with you the news I really wanted to share with you guys, that for the first time ever in my life, out of any asset I've ever owned, for the first time ever, I have a stock that 10x'd. We're up 10x on Robinhood. Now, if you are up 900% on a stock, that's the same as 10x, which is pretty cool. Because if you're up 100%, that's a 2x. Anyway, Robinhood is an absolute monster growth company, up another 2% today. It's up 2%, but on my cost basis, I'm up 10% from my original cost basis today, which is pretty cool. But yeah, we have some risky stocks in here. We're only up 14% all time in here, but we do have $100 of cash. Check this out right here. We do have some losers though, like UiPath. Actually, good news. UiPath had some like weird news today. They're up 10%. I actually did sell a little bit on that news. Let's see. I think they like partnered with OpenAI. Yeah, so it caught with a bunch of companies. UiPath jumped over 10% after announcing strategic collaborations with NVIDIA, OpenAI, Snowflake, and Google. So, I mean, hey, those are some good partners, right? What are some dividend stocks you like? Hey, what up, Barney? So some of the higher, first off, if we could look up here in the top left, this is called dividend only. So this is my dividend only portfolio where every stock in here pays a dividend. So most of these are like dividend growth companies though, like a Google, a Meta. Yeah, one of the higher yielding stocks I like right now that I just bought 10 shares of is IRM, Iron Mountain. I'm only up 2% on my shares. This company has a 3.3% dividend yield, 60%, 62% payout ratio, 95% of the S&P 500 are customers. Another one that I like is Main Street Capital. They're actually one of the few monthly paying dividend stocks with a sustainable yield. They have like a 5.5% yield, pays monthly. Kind of cool. Hey, what up, Dylan? He said, mind checking Unity. Yeah, hey, YouTube agent said I'm subscribed. No way, dude. Thanks so much for the sub, dude. Good to see you. Yeah, let's look at Unity stock right here. Then we can pull up Amazon, everything dies to NVIDIA. Yo, the guy's name is ticker symbol NVIDIA. That's funny. So yeah, here's Unity right here. Dang, they're down 6% of the day. Here's why I would be careful with this name, and I'd probably wait to buy into this stock. If you wanted exposure to Unity, in my opinion, I'd wait for it to go lower. Because honestly, this isn't a great company you really want to well, let me just share with you the numbers for yourself. Yeah, hey, thanks, Luna. Yeah, we hit a 10x today, which is pretty crazy. By the way, I am not at my house right now, and the Wi-Fi is probably going to be buggy today, so that sucks. But here's the thing. Don't worry, we're still going to stream. I still wanted to stream anyway, but here's the tough part about Unity. They literally lose like 100 million in net income every quarter. So they're losing a bunch of net income and they're not even increasing the sales. You know, the sales are down 2% after falling 15. So it's tough to buy Unity right now. I think the premium's too high. So yeah, let's look at CoreWeave right here. Let's pull that up. So you know who actually owns CoreWeave, of course? That is NVIDIA. So CoreWeave has really benefited from being in the NVIDIA ecosystem because NVIDIA got CoreWeave a deal with like OpenAI and APLD. So yeah, they're up 13% on the day. Pretty crazy. After Meta's order. Wait, hold on. CoreWeave boosted appeal of the cloud computing provider call options after a company announced new orders from Meta. So actually, I didn't even know that. I'm glad I looked. So it looks like Meta did a little deal with CoreWeave. That's pretty cool. So they're up 13% of the day. One thing I really like about CoreWeave is just how growthy they are. Like, this is nuts, in my opinion. The revenue is up 3x year over year. So it went from 400 mil to 1.2 billion. And this was a record. 1.2 billion was a record. But check out what analysts are expecting in 2 quarters. 1.8 billion. So there's so much growth expected here. Still be a little careful. They are losing a bunch of net income every quarter, but the analysts are expecting that. So that's that's an AI growth company. Big data center play. And their unused chip capacity is actually going to be bought back by NVIDIA. It gives them that little safety net, which is pretty cool. I don't know if I'd buy them here, though. Let's see. SoFi stock. Yeah, let's do SoFi. And then remind me to look at CPRT. I don't know what that one is. Yeah, here's SoFi right here. They're down 6% on the day. I call this a little healthy RSI retrace. Carlos said, what platform is this? Is this Webull? No, this is not Webull, by the way. If you want to, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. But yeah, look at SoFi right here. They're down 6% of the day. Here's why, honestly, I would look into this company. And here's why I'm not selling. I'm certainly not selling. I'm a shareholder, by the way. I have it in this portfolio over here. I have multiple different portfolios, by the way, but this is our super growth risk on account. I regret every share I've ever sold a SoFi, but we do own 24 shares left of them. Here's what blew me away. Check this out. If we look at their financial services business, they're a fintech. They have their own banking charter. This business is booming. It's up 105% after growing 80, after going 220. Like, this is the kind of growth you want in a company. Like, it really justifies the huge stock price appreciation. You also have a technology platform. That one's also growth. Like, there's no red year over year numbers. Like, it just continues to hit a record every quarter. And their main business, they do loans. That's up 30% year over year, also doing a record. They're just beating on expectations. I really think people are starting to take them serious. If we look at the orange line's what the analysts expect. They just beat on revenue. They beat on net income. They beat on EBITDA. They're making net income. They made $100 million in net income this quarter. Sales are up 42. So anyway, SoFi's a beast. Still, even after its 6% drop, it's still a bit pricey at right now's price. So, but I wouldn't sell out of them. I wouldn't trim them. So, okay. CPRT auction company. And then we'll look at Amazon. Yeah, I have a trading account with SoFi. Hey, nice, doctor. Thanks for supporting my stock. So here's CPRT Copart. Right? Well, they just have a good product. This is a huge company, actually, a $40 billion company, but the stock price has not done too well. I mean, they reported earnings on this day and they had an insane gap down on earnings. So let's go look at their numbers and see what they reported. So, oh yeah, they had a big miss. So for the past 2 quarters, the orange lines what the analysts expect. Look at that big miss on revenue, both quarters. So miss on EBITDA as well. Looks like it's just a bit slow in growth. The revenue's only up 5% year over year. Analysts expected more. So revenue's up 5, but net income's up 22. These are great profits. This is what I actually really like about this stock. They print money. They're making 300 to 400 million in net income a quarter. 81% of the revenue comes in the US. So this specialty business, vehicle sellers, auctions. So it's a vehicle auction company or something like that. They trade at 28 times net income. I think this multiple has, used to trade at 40 times net income. I think the reason it's trended down a bit just because of the slowing sales growth 5. But overall, this is oh, dude, look at this balance sheet. Hold the phone. This is amazing. It's literally a debt-free stock. Dude, it's in the top right. $4.8 billion of cash with no debt on hand. What's the market cap? So literally, here's what's pretty cool. Roughly 10% of the entire company is their cash on hand, they're debt-free. Like, that's such a huge safety net. Pretty cool. Actually, I like CPRT. I do like them. Yo, Maddie, what up, dude? He said INN1. I can't find that one, dude. Let me know, or maybe you typed it in wrong. Let me know. Sorry. Pfizer is up. Does anyone know why? Yeah, the administration today is partnering with Pfizer and oh yeah, look, it's at the very top here. So announced drug pricing deal with Pfizer. Okay, whatever. Basically, they own a bunch of stuff like Viagra, a bunch of random stuff. But a lot of people like Pfizer as a dividend play. If we check out the yield right here, you get a 6.8% yield. So nearly a 7% dividend yield with the healthcare play. That's pretty insane. And for the most part, they can afford it because if we look at the 2 most recent quarters, they made $3 billion both quarters. So let's just round it up. Let's say Pfizer makes $3 billion in net income a quarter. Well, if you go see how much their dividend costs, it costs $2.45 billion a net income a quarter. So They had a like they're making 400 or 500 million more extra left over, which is pretty cool. Can we look at Trade Desk? Yeah, hey, trying to spam there. I was gonna get to that. Don't worry. Um, Actually, let me look at Amazon first. So Amazon right here, this company, yeah, they're down 1.5% of the day. I'm not really too sure why. It's probably just momentum. This is great news because I'm looking to buy more Amazon. Would I buy Amazon? Absolutely. Especially if you have the intention like me to just buy and never sell Amazon. It's absolutely worth buying right now, in my opinion, not financial advice, of course. Let me see if there's any news down here. Amazon invests 1.9 billion in delivery partner program, grassroots strategy for AI, AWS partner, Prime. Okay, whatever. Let's just go. This is a company you don't want as competition. I mean, they are a beast. So actually, I want to show you. A lot of people don't know this. So 40% of Amazon's revenue actually comes from their online stores. So 40% of the revenues are online stores. Then their third-party seller services for all the warehouse management, logistics, and stuff. But then the most valuable part of Amazon is their AWS, Amazon Web Services business. They're actually the number one cloud provider out there, number one market share. And if we look at their revenue, I mean, it's literally over 100 billion of annual revenue for them. It's so growthy. It's their highest margin business as well. It's actually the most valuable part of Amazon. They're not making too much margin delivering you overnight a package, maybe single digit, but they also are an advertising play. 8% of the revenue comes from their advertising services. They're a subscription play. 7% of the revenue comes from their subscription. Then they have physical stores, their grocery stores. They also do online delivery. They're like an Instacart, a UPS, a Walmart, all in one, and a cloud play. They are just, this is a company you just want to buy and never sell. They're so growthy. I mean, if you go to their cash flow investing activities, this is why they're going to do so good in the future. They literally invested 40 billion just this quarter. Like, this is the size of whole entire company's market caps. They don't pay a dividend or do share buybacks, and actually like that because they just spend all their money investing in the business. Like they're the number one robotics play out there, so they're expanding margins. So I like that one. I might be biased though. I do own them right here. They're in my never sell. I got 13 shares in them, but I own them because Amazon is literally a great company in my opinion. So yeah. Okay, so the Trade Desk, this is a company actually that is losing market share from Amazon. This isn't a TV advertising company, and Amazon just did a huge partnership with Roku. So they've been hit with the string of bad news, and I think the Trade Desk is going lower. I would put them on the watches because they're still a great company making good money, but they're too expensive even after this huge dip. So what is this company? They're a TV advertising stock. Like Netflix used to use them. Netflix used to use the Trade Desk to find all their advertisers, but now Netflix now uses Amazon and the Amazon Roku partnership. So they're losing a lot of main customers and they lost their growth as well. So if we go to their multiple right now, even after the dip, they trade at 59 times net income. So that's still a pretty expensive multiple. And if we go to their revenue's up 18%. That's good. Revenue's up 18, but the net income is there we go. Net income is only up by 6% year over year. So what does that mean? That means they actually lost their margins. Their net margin went down by nearly 11% year over year. So I think that they still are way too expensive. I put them on the watch because this is still a great company. I like the business. They're making good money, but it's still too expensive in my opinion. So yeah, hopefully that was helpful. Let's see, is there any news here? Trade Desk unveils AI data-powered audience unlimited. Well, interesting. Yeah, that's an advertising play. All right, so what's the deal with Wolf? This is a meme stock, basically. They're up 43% of the day, so actually that's pretty crazy. A lot of people think that they went up 1,700% yesterday. They didn't, but they did go up 42% of the day. So this is actually pretty crazy. This is all just momentum. Basically, I don't remember the exact news, but someone like bailed them out of bankruptcy or, so restructuring, 70% debt reduction. That's great news. So one thing about this company is this is their financials before today. Look at this. They always had more assets and liabilities. Now, the most recent quarter, their liabilities are more than their assets. $7 billion of debt. Remember, $7 billion plus a debt. The whole entire company is worth $800 million. So that's why this stock before today was literally at zero and was going to continue to climb down. Also, here's why I still would never touch this stock. Like, unless you're swing trading it or something, don't have the intention to never sell. I mean, this is something you swing trade because they literally lost. Remember, the whole company is worth like 800 mil. They lost 669 million this quarter. 300 mil the quarter before, 300 mil the quarter before, 300 mil the quarter before. I mean, this and the sales are down. That's a trash company, but it's all just momentum because the refiling. It's kind of like a Hertz or something. Anyway, let's see. Hey, what up, Gunner81? It's a European bank called ING Holland. Hey, what's the ticker symbol for that one? If you can give me the ticker symbol, I'll check it out, Maddie. Is there really a 1 in the thing, in the name? So someone said SPGI. This is S&P Global. So this, if you ever heard of the S&P 500, any ETF that uses the name S&P 500 has to give this company a royalty. Someone said what happens is, yeah, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite brokerage. But anyway, S&P Global, right? You know, I have all these other ones as well. Like I have a Webull account. You know, I have a bunch of stocks in here and a Robinhood account. You know, I love all these. I also, all the links are in the link tree in my bio. If you want to get any of these apps, they're all in the link tree in my bio. But this one right here is my favorite, especially for doing analysis. It's free. But anyway, check this out. S&P Global right here. I love, we can see where the revenue comes from. You know, I love how diversified this is. You know, 32% market intelligence. And then the ratings business. Dude, this is the shared oligopoly business with Moody's. When they rate debt, they give credit ratings or of companies. And then we can see the commodity insights, indices. So if we go to this app right here, I'm on the brokerage right now. And if you look right here, this isn't just because we're on S&P Global, but you see how it says data from S&P Global? This brokerage right here pays S&P Global for this data right here so we can get the analyst expectations and then we can actually see it. So that's great news. And look at the net income. This is what I love about them. It's so consistent. They're making easily over $1 billion of after-tax net income a quarter. You get a near 1% dividend and they do 1% share buyback. So this is a company, in my opinion, I just buy and never sell. Should hopefully keep up with the S&P 500. So, ETON. Wait, Eton? Thoughts on Eton? Well, let's check it out. Looks like they're at an all-time high today. That's awesome. Congrats. Yeah, literal all-time high. So congrats if you own this one. And even at all-time highs, they're only worth $580 million. So they're still not worth too much, but let's see what they're reporting. Oh, wow, that's some good growth. I mean, it's small numbers, but the revenue did double year over year, doubled the previous quarter as well. They are still losing money, but let's see what the analysts expected. Yeah, so they're the orange lines with analysts expect. Looks like they're beating on their revenue. And, you know, they're worth 500 mil, losing 2 or 3 mil. And as long as it's trending better, this is good news. Their assets are going up and up. So they just invested 40 million in a new asset. Whoa, I wonder how that'll affect their future returns. So this is a prescription, pharmaceutical play. Still be so careful. Only over 500 mil. It also could be good, you know. All right. So did you look at StubHub? I don't know what that is. Hey, if you got a stock you want to look at, let me know what the ticker symbol. Kava hit hard, but I think at a floor. Oh yeah, hey, that's that like Chipotle competitor. This stock right here, unfortunately, yeah, look at that. They're at like a new 52-week low, unfortunately. And it's not just Kava. That's the thing. It's not just Kava. It's the whole industry. You look at like Chipotle, probably their biggest competitor. Look at them. The charts look nearly identical. So probably the safer, bigger play that's also on a dip would be Chipotle. So I would honestly rather buy Chipotle. But here's what I'd stay away. Look at Wendy's as well. Like Wendy's, all the restaurants are getting destroyed right now. I mean, Wendy's is at an all-time low. They're at their 2007 price. Like look at Jack in the Box. Like, so it's not just Kava that's really seeing this huge decline. All right. Kava has higher customer growth year after year. Well, that's just because they're opening up. They have so little stores. Their same store sales growth looks nuts. Rich Tech Robotics. Yeah, stay away from that one. That one's not good. Oh, CNC. Can you check McDonald's? Yeah, remind me to I'll look at McDonald's. Don't worry. What up, afternoon? So this is a Medicare Medicaid stock. They're kind of like they're basically a smaller UNH. Well, what's their market cap? $17 billion company. So yeah, a smaller version of UNH. They just do Medicare, Medicaid. Let's see if we can see that. Yeah, so look at that. 60% of their revenue is Medicaid and then 20% Medicare. Now, this is one of the companies, as well as UNH, being accused of fraud. And if they get accused of fraud, they're literally going to get kicked out for the next 5 years. from Medicare and Medicaid, and that's kind of what's being priced into the stock right now. That's why it had to tank so much. The slight odds of that. We're going to also see the net income projections aren't great. Like this company is, if we look at the EPS right here, they're usually always making net income every quarter, but this quarter went negative because of this, and the next 2 quarters are expecting insanely negative net income numbers. So at least they're not like UNH, where UNH, their net income is, they have to pay a dividend. They're still going to be making EPS, but it won't even be able to afford the dividend. At least they don't have to pay a dividend. But yeah, basically smaller UNH. You still have the headwind of the government regulation, but maybe it's being priced away. So NET right here, net, what app are you using? Yeah, hey, what up, Hush? This, if you want to get it, it's in the link tree in my bio, the very first link there. This is actually, it's where you buy stocks on. So link tree in bio, first link if you want to get it. But anyway, someone said, NET, hey, Looney, do you want me to look at SoFi if you want me to? But they're just having a momentum small downtrade day. What do you think of NVIDIA with earnings report tomorrow? NVIDIA what reports tomorrow? No. Wait, with earnings, I don't know. I'll have to look into that. I feel like I would have heard about that. Maybe I'm just slow. But anyway, here's Cloudflare right here. This is one of the best cybersecurity Internet of Things stocks out there. Best software play, or one of the top ones out there. They are expensive, but did you know, and this is a crazy fact, if you can like comprehend this, 19% of all global internet traffic goes through Cloudflare in one way or another. It's insane how much of a footprint this has on the internet. So, and they're really growthy as well. If we look at this on an annual basis, I mean, this is the trend you want to see. You know, it hits a new record every year. Like 2016 was 84 mil. And then look at these growth rates, 50, 50, 50, 50, 50. Now, just law of large numbers, it's slowing down a little bit. But anyway, I love the growth on this company. They're still struggling with net income positivity, but that's because they actually just acquired a company. How can you tell? Well, first off, you can see the balance sheet. You can see the assets went from 3.7 to 5.5, but you just go to the cash from investing activities. If this is negative, that means they just bought a company or bought an asset or something. So yeah, it's cool to see that they just invested 800 mil. Yeah. Okay, so yeah, we can definitely look at McDonald's. By the way, that's my second largest holding of all time. I think this is a perfect stock to buy even right now because, you know, tech is expensive. A lot of stuff is expensive, but not McDonald's. And McDonald's isn't a restaurant like most people think. This is actually a real estate royalty company. If you literally go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty. And they own the land under 80% of the store. So if we're in a recession, tenants are still paying rent to the company and paying a little bit of royalties. And look in 2008, that's what's so cool about this model. I call them recession proof, not financial advice, but they're really recession resilient. In 2008, they didn't fall. Look at this. McDonald's and Walmart were the 2 best performing stocks in the whole stock market. Like in 2008, it was crazy. So McDonald's is a great dividend growth company. I could talk about them all day. They just brought back the value menus, the extra value meals, the $5 breakfast meal, $5 meal deal, $8 Big Mac meal. I love everything McDonald's is doing. And hey, dude, no way. Did anyone see McDonald's Monopoly is back? Please tell me someone else heard about that. McDonald's Monopoly is back in 6 days, where you can buy a cup or a large fry and you could peel off the little Monopoly sticker and you could win another free large fry or something. Anyway, let me stop talking about McDonald's before I get carried away. What do you think about AI companies or computing companies that will help out AI like NVIDIA? Yeah, I love NVIDIA, AMD. I own a lot of those kind of stocks. You know, I own the whole AI ecosystem, from the nuclear energy reactors that power it to the ones that supply the copper cables to NVIDIA. You know, I own the whole ecosystem to even to the people that cool down the server racks with comfort systems. I try to own a bit of the whole ecosystem benefiting from AI. Like Amphenol, this is the copper cable company supplying NVIDIA with copper cables for their NVLink spine that uses 2 miles of copper cables. It's pretty crazy. That industry, like the CAGR of their I forget the exact market it's called, but it's supposed to literally CAGR at 30% a year until 2030. So the growth of this one is obscene. I wonder if I could find that exact article, but the industry they're in is supposed to CAGR at an insanely high rate. Oh, maybe it's this one right here. Optical, well, this is a different one, but optical transceiver market projected to reach CAGR of 14. That's pretty good. Anyway, let's get back to some more stock. Monster energy drink stock. Heck yeah, dude. I actually own the bottling company for Monster, so I own Coca-Cola Consolidated. They bottle the beverages for Monster. And if you're wondering, wait, Coca-Cola bottles for Monster, isn't that like their competition? Well, Coca-Cola, if you didn't know, is the largest shareholder of Monster Beverage. So if you own Coca-Cola stock, ticker symbol KO, you own a bit of Monster. So 21% of this entire company is owned by Coca-Cola. So technically 21% of all the revenue, 21% of all their net income goes back to Coca-Cola stock. So that's a great company to have as a shareholder. But yeah, they make money. They get so much free advertising, Monster, but they're making legit a couple $100 million in net income a quarter. They're doing insane share buybacks. You ready for this? You're not going to believe this, but it's true. The net income is up by 15. So net income is up by 15% year over year, but the net income per share is up by 20 freaking 2. That's because the share part of the ratio went down so much. They're buying back their own shares like a monster. They have a monster balance sheet. I mean, I really love this company. Sadly, I own them and I sold them like an idiot. And actually, I actually sold them to buy Coca-Cola Consolidated. They bottle from Monster, but yeah, there's my side of the bet. Also, Coca-Cola Consolidated and Monster are kind of similar. This one also does insane share buybacks. Like if you go to the net income is up by 8. Net income's up by 8, but net income per share is up by 16. Dude, that's insane. I'm 30 years old. I have a lot of awareness. I think I should start day trading. Yo, hey, if you're good at that, I'm not good at that, but I love just buying and holding great companies for the long run. Like you can, honestly, not financial advice, you'll most likely get better returns buying and holding a great quality company than you would wasting all your time trying to trade something like, or at least if you pick the right stocks. But I'm not good at trading. All right, so I'm just a fan of buying and holding the S&P 500. You shouldn't see the market as get rich quick. It's like preserve and slowly build wealth. You started as $100, you started 100, and you compound it over a year to 108, and then you snowball it from 108 to 120, then 120 to 150, and it snowball starts. So pretty cool. Someone said, "Would you call Bitcoin a quality company?" Well, that is it's not exactly a company. Someone said, but yeah, I do like Bitcoin, but I don't own any. Where's the best place to learn trading? Yo, hey, Josh, best place to learn about trading? By the way, I sell nothing. I have no course, book, WhatsApp. I don't do private tutoring or nothing like that. So you'll have to go elsewhere for someone to teach you. But I do appreciate you being here. I don't sell anything. So, but if you do want to start getting in stocks, you can get this app right here. This is where or any of these apps, I like Robinhood. I like Moomoo. If you're trying to invest in stocks, you need a brokerage. And so these are all the brokerages I have. This is my favorite one. If you want to get this brokerage I'm on, yeah, it's in the link tree in my bio, the very first link there. Robinhood's the second link. And then anyway. So someone said UiPath. So, STUB. Actually, remind me to look at UiPath. You got to remind me to look at UiPath. So here's StubHub. What is this company? Is this like well, let me look. Provides online ticket selling services for sports, concerts, theaters, and other live entertainment. So this is like a Live Nation kind of company. 82% of the revenue comes from the US, 9% Switzerland. Well, let's see how the revenue's doing. Looks like they haven't been public for too long, but the revenue actually declined year over year. Maybe we were comparing to a strong environment. Maybe that was the Taylor Swift concert. I don't remember. They are losing net income every quarter, so that's not great. So this just isn't great. Revenue's down 3, losing net income every quarter. Not amazing balance sheet. Is the cash flow positive? Yeah, at least the cash flow is kind of positive, but it fell 90% year over year. I would just be careful with that one. I mean, nothing's really blowing me away there. For a ticket company. Stub has a monopoly on live events. What's the Live Nation stock? I'm pretty sure they were Live Nation. Yeah, here it is. Here's maybe the better play in my opinion. Yeah, look at this stock. This one's at all-time highs. Let's go look at their fundamentals. This does the exact same thing. Yeah, concerts, ticketing. Actually, this was the company that did the concerts for Taylor Swift. So what's the market cap on this one compared to that one? Yeah, this is a $40 billion company. This is huge. Let's see. Yeah, and they're actually, here's the difference between those two companies. Well, the growth is kind of similar, but these are way bigger numbers. It's probably the safer play. If you just want exposure to that industry, this one probably is a safer play. But the revenue's up 16%, and they're making net income every quarter. They're making a couple $100 million net income. Let's see, are they doing share buybacks? EPS? No, I don't think so. Liberty Media. Well, anyway, hopefully that was helpful. I have Robinhood. Yeah, I love Robinhood as well. I might buy more SoFi soon. Yeah, hey, SoFi's on a little dip. Live Nation is great for sure, but people were having issues with them. Not trying to spam, but could you look at UPST? Yeah, hey, sorry. If I don't get to all the stocks, I do apologize. Feel free to recomment it after it's off the screen or something. I don't mind. I don't mind. It's when people like spam the ticker like 5 times in a row. It's annoying. But anyway, you're cool. Let's see. Here's Upstart right here. I believe this is like an affiliate marketing company, or I forget. So they're actually the same price as they were when they IPO'd. Let's go see what they do again. Cloud-based artificial intelligence lending platform. So personal loans, auto loans, HELOC loans too. So basically just loans, debt. So let's see what their expectations were. So look at them the past couple quarters. The orange lines with the analysts expected. Looks like they're beating on expectations the past couple quarters. They're beating on every metric. They're beating on revenue every quarter. They're beating on net income every quarter. I wonder why the stock is struggling. Wow, look at that growth. That's insane, actually. Revenue's up 100% this quarter. Last quarter's up 66. Are they making profits? So this is a huge improvement from what it used to be the same time last year. They used to lose, 40, 50 mil a quarter. It was a tough buy, but here's a company that actually made net income this quarter and barely lost any money. So this one's actually interesting. Again, I don't love the industry like loans, car loans, but as we go into a lower interest rate environment, maybe people will refinance these and they can capture that boom. I don't know if they get that exact benefit like the mortgage companies, like a Rocket Mortgage would, which is real estate. But anyway, Live Nation almost has a monopoly on ticket sales because most artists link their websites to them. Oh, hey, Q. That's pretty interesting. What up, German? Good to see you, man. If you had 1K to put into a stock, what's your best bet? Well, first off, I just put it in the S&P 500, but then I just picked something super safe, like an answer you probably are kind of cop out answer, but I probably pick like Amazon or something right now. McDonald's that's the safest play out there. McDonald's, Amazon, Google, Meta. And honestly, I'd love to pick some other names if they weren't so dang expensive right now. I love these companies, but man, are they expensive. Even SoFi after its little 6% dip is still a little pricey. Robinhood, first ever 10x today on Robinhood, new all-time high. That's incredible. I'm actually going to make a YouTube video about this soon, but yeah, Robinhood, I regret every share I've ever sold to them, but a lot of these companies that I would probably like want to buy in over 10 years, it's tough to buy them at their current prices. But yeah, by the way, if you look at this portfolio right here, if you look in the top left, it's called my buy and never sell portfolio, because once I buy a stock in here, I kid you not, I literally try and never sell it. There we go. Only stock I've ever sold, I think, in here was Nike and CubeSmart. Yeah, man, I feel bad for Nike. Anytime I ever sell a stock, you'll see the exact sell order. And if I buy it, you can see the exact buy order when I did it. So I just love being fully transparent. You got any questions for me, let me know. Man, I think DocuSign fell 10% today. Let me see. Yeah, dude. Oh, RP my DocuSign position. I wonder if there's any news. I mean, that's not good. Dude, that's like reporting earnings. Okay, let's go see the news here. There's no news. Is there comments and any intelligent comments here? Oak family acquires shares of DocuSign. I mean, these are all in the past hour, but there's no real news. Well, sorry, let's get off that. All right. Can we look at NVO? All right, what up, New York? So this is the weight loss company. Oh, wait. Remind me to look at UiPath after this. UiPath just got that big deal. Nike earnings are this evening, by the way. You're right. Or is it on Wednesday? I thought it was on the 1st. We'll check after this. But you're probably right, though. Here's Novo Nordisk. This is that weight loss prescription company. And hey, what up, John? Made any recent purchases? I bought 0.3 shares of Wix today with my extra money. So I bought $30 worth of ticker symbol WIX and $5 in McDonald's. I don't know why, but I went and bought a $5 breakfast meal at McDonald's, and I also bought $5 fractional share at McDonald's today. So there you go. But here's Novo Nordisk. This is that weight loss prescription company, and one reason why the stock has really been getting hurt is because they lose their exclusivity for Ozempic in a couple years. So yeah, if you've heard of Ozempic, Wegovy, this is the stock that actually owns it. They own it. But again, they lose the exclusivity for it in a couple years, and that's why their multiple is so low compared to the industry. Industry average is 22, well, they're at 14. But yeah, 93% of the revenue is their obesity care products. Elon Musk is on Ozempic. I mean, that's really popular right now, the weight loss prescriptions. Like Eli Lilly is getting into it. And for right now, though, this is why I think Novo Nordisk is worth putting on the watch list. The risk reward is pretty decent here. Like, it's worth nibbling on. You definitely don't want this as a huge position, but I think it's worth maybe as like a nibble. Again, they are Europeans, so if you're in the US, you are paying a yearly ADR fee. So that's why I'm just avoiding this one. I just like to keep it simple. Like, there's so many, but look at this right here. They're making good money. That's why I also stay away from ASML, but they're making over $4 billion of after-tax net income a quarter in USD, and they have a 3.3% dividend yield, safe payout ratio. But it's the future uncertainty that's really weighing on their stock price and multiple, and that's why they've done so well. So I think it's mostly priced in now, and probably risk reward decent. Hey, Jello, what up? Would you take profits? Bought 17 shares the other day. So yeah, CoreWeave, actually, I would maybe sell like a small position of it, but I would keep a little bit. I think I've been overly bearish on CoreWeave. Well, no, I haven't always been, because I've always looked at their growth very favorably. They just got a huge deal with Meta today. So, Meta also signed a $30 billion cloud deal with Google. They're going to need more, so they went with CoreWeave, and I think they were talking about doing with Oracle as well. Actually, let me go to the top here so you can really see the news. And remind me to look at UiPath. I keep forgetting. I'm so sorry. Thoughts on Spotify? Spotify was down today. Remind me to look at them too. But yeah, CoreWeave rallies after Meta gets an order from them. Wait, hold on. Meta committed to pay as much as $14.2 billion through December 2031. That's about half as much as Google, but that's a huge deal, especially considering the market cap, a $66 billion. That deal they'll probably make good margins on that. Anyway, so they're also probably going to beat these growth expectations. First off, the main thing I love about CoreWeave is the growth. Check this out. The revenue went from 400 mil to 1.2 billion. It just hits a record every year, every quarter. It went up 3x year over year, and this was a record, 1.2 billion. But check out what analysts expect in 2 quarters, 1.8 billion. And this hasn't even updated yet with the new Meta news and the OpenAI news, because they've really just benefited from being a partner with NVIDIA. And hey, I forgot to mention this. Oh, dude, George P610. If you're still in here, dude, I am so sorry I didn't see this. He left a confetti worth 100 coins. Dude, thank you so much, George P, if you're still in here. I'm gonna follow him. Hopefully, my apologies. But anyway, by the way, I'll never follow anyone or DM. I don't sell anything. I have no course book. But I just love how growthy CoreWeave is. And also, NVIDIA owns them. NVIDIA, I believe, is the largest shareholder. SoftBank took some stake. But yeah, 85% of NVIDIA's portfolio is in CoreWeave. Pretty cool. So, Q said, yeah, no problem, Jello. Thanks for always showing up to the streams. I appreciate you. But someone said, can we look at ticker symbol YOU? What do you think it could hit? I actually own that company. And it's a cool company, but I have it as, wow, they're down 7% today. Yikes. Well, shoot. Okay. Well, anyway, here's ticker symbol U. This is Clear Secure. If you've ever been to an airport before, you've maybe seen those Clear Secure machines where you can just like get your biometric scan and like skip the line. It's pretty interesting, but I mainly just like them because they're pretty growthy. I mean, if you look at the revenue, it just hits a record every year, every quarter. It's really federally regulated. Like they're not going to allow another competition for Clear Secure, in airports. Like another fear is like the government could just replace them. Like the government could just do exactly what Clear Secure does. But anyway, I like these net income numbers, especially from what it used to be. They used to lose net income every quarter. Now they're actually making good net income every quarter, and they pay a dividend on top of that, and sometimes special dividends. So I wouldn't probably pay its current price, and if I did own them, or I do own them, but if I didn't own them and wanted to, I would not make it a meaningful size position. Like I have a lot of fun money stocks like that, like PSIX, T-Row, Toast, Pod, Calmain. These are fun stocks with, I really think, good fundamentals, but I just couldn't make them as meaningful size positions. So let's pull up Spotify. Yeah, let's do it. So, this is a company that it's kind of weird how good it's done. A couple reasons I stay away from Spotify is they don't own their music. That's UMG, Universal Music Groups, owns all the music, and they can hike the prices. And also, I should pull up my YouTube Music because YouTube Music has identically copied Spotify. Like it looks exactly the same. And I use YouTube Music. It's part of my YouTube premium subscription. So anyway, Apple Music is another competitor. Apple Music does the exact same thing. But anyway, this they still have good fundamentals for right now. I think the valuation, only thing that unfortunate is about Spotify keeping me away is the high valuation and some of those things I just said. But I like the numbers. Like the numbers are good. Like foremost. So sorry, my thing disconnected there. But look at the revenue. The revenue's up 21% after going 18. So good revenue, $5 billion in revenue. But look at this net income right here. It says they lost $100 million in net income this quarter. That was actually a one-time adjustment. You always look at the operating profit as well. So so kind of ignore this quarter, but yeah, they're easily making $300 to $400 million in net income a quarter. Did they buy a company or something? Oh, yeah. So they went through some acquisition that they've been doing, and that probably led to a realized loss in the net income. But the core business, you look at the operating profit without those little one-time adjustments. Like you always got to look at operating profit for like Tesla stock, for example, because there's so many funny money GAAP net income tricks to the net income. But you look at operating profit, it's looking great here. Same with the FCF, which stands for free cash flow. These growth rates are insane. Free cash flow is up 56% after growing 4,000%. We can also see they have their premium revenue and their ad-supported revenue. So if you don't pay for their premium subscription, you see ads. How's the ad revenue? Wow, it's $500 million a quarter, up 9% year over year. How many subs do they have? Premium subscribers, they have 276 million people paying for their subscription. Pretty insane. Ad-supported monthly active users are 433 million. Pretty cool. So that's Spotify. I'd rather buy Amazon instead of Spotify. Yeah. All right. Yeah, much cheaper. Or I'd rather buy Google over Amazon, or not over Amazon, over Spotify, because Google and YouTube Music, if anyone has Spotify, I don't want to like show my music. I don't want to get judged, but I was showing it with my cousin because he has Spotify, and I was telling him how much I love YouTube Music over Spotify. He's like, dude, they've copied it exactly. They've made it better. Okay, anyway, let's see. Hey, what up? Improvement said, is SCHD dead? They're lagging VO a lot this year. Well, that, in my opinion, will always be the case. This company used to keep up with the S&P 500. You want to know why? Because it used to have growth companies. Its largest holding, you ready for this? Used to be Broadcom, AVGO. I actually used to own it. I owned Broadcom, or I owned this ETF when it owned Broadcom. Imagine, instead of AbbVie, it would have said Broadcom, but they completely sold out of it at the worst time. And not just them as well, but some other great companies that I really love. It's because of their strategy. They can't let their winners win. This can never inherently outperform the S&P 500. They don't let their winners win. So they have to buy stocks within a certain yield criteria. But first off, it's just a high dividend yielding ETF. If we look at the dividend right here, you get a 3.81% dividend. I still like this one. I think it's a nice diversification away from the tech heavy S&P 500. You own the S&P 500, and then maybe, you will underperform with this, but it's maybe a nice diversification play into some of these higher yielding assets like AbbVie. I love AbbVie. I'd happily own AbbVie individually, maybe buy them individually. Super safe stock. Chevron, ConocoPhillips, some of the oil plays, Home Depot, interest rate sensitive. I love Home Depot, or some Verizon. Like some of these don't outperform. Like if you click at Verizon, for example, like did you know Verizon is the exact same price that it was back in 1997? So, but you get the nice yield. So anyway, you never answered my question. Hey, my bad. I don't even know what question you said. Nathan, is the future bright for IONQ, InnoData, RGT on BBI? Well, I don't know. I like, out of all that list, most of those are trash, but I like INOD. Most of those stocks you mentioned are companies, are startups with like basically no revenue. But I like InnoData. I do own them. Yeah, like RGTI is revenue. Here's the thing. When some people talk about a bubble, like, I'm not trying to be so bearish here. This is a pure momentum play, but here's the thing. I can't fundamentally trust this stock. And I'll just show you the numbers for yourself. You can draw your own conclusion. I never try and be like me, but check this out. Look in the top right here. Who's buying this right now? I don't get it. But if you look in the top right, the market cap is $9.5 billion. I think I've been around. I know very many companies that are worth $9.5 billion. I know what a $9.5 billion company should look like. And here's their fundamentals. You ready? The revenue is down 42%, and the revenue is 1.8 million. So and they're burning through like 20 million net income a quarter. So it's hard to really trust this name. One thing though that's super smart of Riggedy, I say super smart. They've just really taken advantage of the momentum. If you're wondering like how did their balance sheet really beef up like this? Well, it's because they just diluted the shareholder, but they've been issuing shares to take advantage and really beef up their balance sheet, which is super smart of them. If I was Riggedy Computing, I'd be diluting the shareholder even more than they're doing. But anyway, hopefully here's the kind of bull case though. They can dilute the shareholder by $1 billion and do what IONQ just did. IONQ just did something kind of smart. They took advantage of the bubble. They were able, since the stock is at an insane market cap, this one's worth $18 billion, also basically a revenue-less company. They were able to just issue $1 billion of stock, dilute the shareholder by a couple percent, and buy a company for $1 billion. Oh, it's already gone over here. But IONQ just bought a company for $1 billion. So that should be good news. Yeah, if you're wondering like, hey, how is their balance sheet going up like this? You see, it was $500 million 2 quarters ago. Now it's $1.35 billion. The debt didn't go up. Well, I bet you if you go to cash from investing activities, yep, that's how you tell. Anyway, hopefully that was helpful. I think some of those are insane, nutty valuations, but hey, so someone said UiPath. So that's actually my biggest loser down here, but they've lost all the gains today. If you look right here, I sold 2 shares at $15.29 this morning. At $15.29, it's 13 now. So I'm actively trying to get out of this stock. They did have a little partnership today. They actually partnered with NVIDIA, OpenAI, and Google Gemini. So they had some pretty cool partnerships. So I can see why the stock is up 8% on the day. But they're kind of just too cheap for me to sell right now. I'm actively trying to get out of them. They've really like a low moat now. They were I was buying this stock. Let's see. Look at the buy orders. Oh my goodness. In 2021, I bought a share. Look at these. I was buying shares at 57 a share, 52 a share. What's it today? $13. So this was the original robotics AI play, and I kind of fell for the IPO. There's the buy orders. So again, always do your own research. None of this financial advice. I should have done that. Was back then when I didn't really know how to research a company. But they're kind of too cheap to sell. They have okay financials, but all right. Qualcomm. Let's see. Gani said SEHD is not about dividend growth, it's about dividends. Yeah, I agree. You buy it to maximize your yield there. But here's a great dividend growth company, in my opinion. If you're looking for, this is a stock that should be an SEHD. If this isn't an SEHD, it might be one day. So check this out right here. If we look at the yield, you get an over 2% dividend yield, and look at their dividend every year. It gets risen. So 2020 it was 250. Now it's 330. A nice little increase, And look at the PE ratio. The PE ratio is just net income multiple plus any buybacks or dilution. They're literally trading at 16 times net income. They sell smartphone chips. I think they own like Snapdragon, I think it's called, but they have a 28% smartphone chip market share, which is pretty insane. And they're making good money. I mean, that's why I think this one's worth looking into. They make good, basically $2 to $3 billion in net income a quarter. And look at these growth rates. Pretty good. What are the sales growth? So sales are up double digits. Net income's up 25. So they're expanding margins. Yeah, 25% net margins, 2% plus dividend. And actually the better part is the share buyback. So look, net income's up 25, but net income per share is up 29. So you own 4% more of the company than you did a year ago from share buybacks and 2% from dividends. That's an insanely shareholder friendly company. All right. Hey, Cruz, what up, dude? Hope you're having a great Tuesday, my friend. So here's AMD. And yeah, Nemo, EA going private, or EA is being bought by a private company. That should be really interesting. Honestly, you know why that's smart? Because EA has a dividend. And whenever they go, and it literally I think 40 or 50% of every net income dollar they make gets paid to the dividend. Well, as soon as they buy that company, they don't have to pay a dividend anymore. And synergies go up. Anyway, let me stop talking about EA. I might get back to that one. That's like Madden stock. But here's AMD right here. I do own AMD, by the way. Someone just said, UZG said AMD is my biggest positioner. So nice. So I do own a little bit of them. I don't know if I trust them as my largest position, but I got 11 shares, and then the multiple is a bit high. But here's why I love AMD more. I like them better than NVIDIA right now. Here's why I chose AMD over NVIDIA. If we look at this market cap right here, it's a $260 billion company. So that's a big market cap, but not compared to NVIDIA. Look at NVIDIA. They are worth $4.5 trillion. So if you buy NVIDIA right now, for you to double your money, they have to be worth, wait, 9 trillion. Wow. Yeah, $9 trillion for you to double your money on NVIDIA. I think it's an easier double on AMD. Of course, not financial advice. So this is my chip play. Just law of large numbers is squeezing NVIDIA, but I think NVIDIA is still going to continue to climb up higher. Wouldn't be shocked with all the orders from OpenAI, Oracle, CoreWeave. So anyway, here's I need Lisa Sue, do something. We need some AMD news because we haven't gotten any of that. But anyway, here's the PC GPU market share, 17% market share, huge in that. Obviously, we know 50% of the revenue comes from their gaming, but they also have this nice data center business. It's been growing very nicely. It's up 15% after growing 114, so continuing those gains. So I do like AMD for that. And their actual numbers they're no longer advanced money destroyer. The growth is finally back because the growth was gone for a while, but it's back. You can see the revenue is pretty much at a record for the past 2 years. The free cash flow as well, up 4x year over year. Net income is up 3x year over year. And look at this balance sheet. They have no net debt. But again, the valuation is still a little high on this one. But yeah, AMD scares me. I do have some shares though. That's exactly how I feel with a lot of stocks. I'm scared about them. I own them. So I'm just going to chill on my shares. I'm not going to add to my position really. So yeah, hopefully that was helpful. Okay, so actually, I'll pull up EA really quickly. Yeah, so basically, the stock is rallying on what someone I don't want to find who is acquiring them. Doesn't really matter the name, but basically, a company has taken them private. And if we look at the dividend right here, oh, well, actually, the yield's smaller than I thought, and it's a lower payout ratio. So they have a 0.4% dividend yield, 17% payout ratio, but they own a lot of games that you've probably heard of before: Apex Legends, The Sims, Battlefield, Plants vs. Zombies, FIFA, Madden NFL, Star Wars licensed games. Okay, anyway, EA is a big gaming company. Kind of like Take-Two. So, Nigel, what up? He said DHR. Is that Donna here? That might be. You know what's so weird? I don't know. There was someone walking in my neighborhood today with a Donna here shirt on. And I saw him a long time ago with a Splunk shirt on, and I said hi to him. I don't know. Okay, well, anyway, here's Donahue stock. I forget what this company does. Is it like a materials or no? Okay, so no. Diagnostic, biotech, and life sciences company. Okay, so 41% of the revenue comes from the U.S. Let's see revenue. So this, I would like to see this be a little bit more growthy, if I'm totally being honest. That might be why the stock is pretty off. It's pretty high off all-time highs. Because if you look at the S&P 500 or the QQQ, they're at all-time highs. I think the reason this one is well off all-time highs because they're not as growthy. This barely beats inflation, if not doesn't beat inflation. The revenue's up 3.3% year over year. Previous quarter, it was down 1%, then up 2%. Like, it's just so slow growing. But if we go to the net income, ooh, is that real? So actually their margins just collapsed as well. Like, that's real. This isn't some like one-time adjustment. Like, the net margin really fell to under 10%. I'd be careful with this company. I want to see the growth come back. They're still making great numbers. Don't get me wrong. I mean, this is insane profit, 800 mil to $1 billion a quarter, and you get a small yield, but I want to see the growth come back. Also AMD for 200. Hey, if it gets to 200, there must be some good news. What's your method for researching a company? Well, basically kind of everything I do on the stream, like I just look at all the financials and try to blend them all together. By the way, I have a YouTube video where first off, I sell nothing. I have no course, book, WhatsApp. I have no private group or anything. All I have is a YouTube channel where I just release stuff for free. So I have a video on my YouTube channel called How I Research a Stock. So if you want to support me, hey, by the way, the number one way to support me is just sub to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. I'm also streaming on my YouTube channel as well. I'm streaming on TikTok and YouTube. I'm reading both chats. I actually read the YouTube chat first. I'll get to every stock no matter what on the YouTube stream. So if you have a stock you desperately want me to look at, comment on the YouTube stream and I'll for sure see it. So let's keep going here. SEZL thoughts. Yo, I love SEZL as a fintech play. If you're looking for like a great growth company, this is one I'd put on the watch list. Not financial advice. Put this stock on your watch list. And by the way, I'm not at my house right now, so the Wi-Fi is probably, yeah, it's a little slow today. I apologize. But check this out. Dang, they're at like, actually, this is good because this gives us an opportunity to maybe buy into this company. And check this out. This is a growth company. I would totally own this one if I didn't own their biggest competitor, which is Dave. So you can either buy SEZL or you can buy ticker symbol Dave. Their financials look nearly identical and their stock charts look nearly identical. But check out the revenue. They're so growthy. I love this. Revenue's up 76% after going 60. They had $1 million or $100 million of revenue. Out of this $100 million of revenue, legit, 27 million of it was after tax net income. The revenue was up, or the profits were up 100% year over year. They're expanding their margins. They had a little one-time adjustment that one quarter. It says 52% margin. It wasn't actually that high, but all of the other quarters are real. Like they really do have like 25 to 35% net margins. They're pretty insane. So yeah, and they're also beating on expectations. Emmanuel said, what do you think about the movement of gold because it's been consolidating? Yeah, gold's at pretty much an all-time high right now. The way to check is gold is ticker symbol IAU. Look at that. All-time high. If you've ever bought gold ever, you're definitely up in terms of how much dollars it gives you. So if you got any gold chains, gold jewelry or something, maybe go hit up the pawn shop and sell it. You'll get the most amount of cash you ever could for it because prices are nuts. But again, what does that really mean in the background? You know, gold does good in war fears, inflation fears, currency fears, all that, you know, fear kind of environment. So Down said PAXG, is that Paxos Gold? Yeah, so that's a crypto. I can't really give you any thoughts on this one, but it's a unique crypto because it actually follows the price of gold. They own a bunch of gold in like London vaults. It's pretty interesting. You sound genuine. I will sub to you. Still, you start pushing courses, then I'm out. Hey, you know what? Hopefully you do that, King, because I realistically plan to never sell a course or book or anything like that. Yeah, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram will never follow you, DM you. If you hit the follow button, I really appreciate that. You might get followed by someone like having the same name as me. Just know that's not me. I didn't follow you. I didn't DM you. The only thing I have is this TikTok and a YouTube channel. So Looney, what up? He said Alibaba. I love this company. Well, I like Amazon more, but this is basically Chinese Amazon. They own AliExpress. It's kind of like a Temu competitor. Temu's more business to consumer, but AliExpress is more business to business because AliExpress, normally someone buys a bunch of stuff in bulk there and then sells it on their own drop shipping website or whatever. But anyway, let's look at I like them because the net income looks great right now. They're making if you average it out here, like 4 or 5 billion in net income a quarter, you get a small yield as well. 0.6% yield, 13% payout ratio. And one of the reasons they actually missed on earnings, they had bad earnings, but they gave good guidance because if you didn't know, NVIDIA is no longer allowed to sell their new chips to China. And Alibaba came out and said, we're going to fill that gap. We're going to start making chips ourselves and sell them to our Chinese friends. So I guess there's going to be an AliExpress made GPU now. I think they're a couple years behind NVIDIA for sure on their technology. Like AMD's like a year and a half behind NVIDIA. Larry said, what app are you using? Yeah, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Use my affiliate link. Appreciate that. You can just type it into Google, just a broker called Moomoo. So Yan said, what do you think of Hood at this moment? I have all these other brokerages as well. I have all the apps linked in the link tree in my bio, like Robinhood as well. For my affiliate links, if you sign up and deposit, we'll both get a little free share or something, which is pretty cool. But anyway, someone said, what do you think of Robinhood stock? I have a Robinhood brokerage. I've probably given them a lot of referral fees a lot of fees from buying and selling stocks, and I own their stock as well. And as of today, this is insane, you guys. As of today, this is my first stock ever, first asset ever to 10x. If you're up 900%, that means you 10x your position. So I can't believe this. We're up at a new all-time high because of Robinhood. So that's a stock I regret every share I've ever sold of. I used to own 50 more shares of Robinhood, but I trimmed it at a way lower position and I kicked myself in the nuts for it. So same with SoFi. I used to own a lot more shares, but I sold a lot of it. Don't sell great companies sometimes. That'll sometimes be your biggest regret. Thankfully, I didn't fully sell out of them. You don't know how mad I'd be at myself if I fully sold out of SoFi or Robinhood. But thank goodness I didn't. Brother, hey, thanks King for hitting the sub button. And Glamo, what's up, dude? US Glad. Hey, that's a BDC, I believe, Gladstone Capital. This is one of the more, well, let's see. These BDCs have a rule. Where literally by law, 90% of their taxable income has to be. So let me get my water here. This company has a rule, they're just like REITs, where 90% of their taxable income literally has to be paid out in the form of a dividend by law to avoid paying taxes. So when you look at these BDCs and you see a super high yield, just know that's normal for this industry. Also, when you receive dividends, they're taxed at short-term capital gains and not long-term capital gains. So I'm not loving this. Like if we fundamentally analyze this one, I don't like seeing revenue down, 16%. So revenue's down 16, and the net income fell by 59. So look at that. Normally they're making 20 to 30 million a quarter. But this 2 quarters, they only made 8 million. Let's go see how much the dividend cost every quarter. So they made 8 million the past 2 quarters, and check this out. Dividend cost 11 million. They used to be able to afford that. I mean, look at that. They were easily, they're making 20 to 30 million, but these 2 quarters, that I think explains why the stock just had this major drop. I just be careful with that name. I mostly use my PC. Hey, this app I'm on right now is also for PC. I'm on. Yeah, if you want to get this app I'm on right, this is my favorite one, out of all the brokerages, the most useful one, lowest fee, like best tools and everything is this one right here. If you want to get it, it's in the link tree in my bio, the very first link there. They also just added the Pelosi tracker and all this stuff right here. So you can view all the super investors' portfolios, literally by SEC law, they have to make all their trades public so you can see their exact portfolios and weightings. And you can now batch trade, like follow them into their positions. You can like set the weighting and stuff. So yeah, you can see the exact trades and everything by the exact date. Wait, will that load? Sorry, by the way, I'm not at my house right now, and the Wi-Fi is like terrible here. So, hey, there you go. So, anyway, you can see Buffett's portfolio, Kathy Wood, and the Nvidia portfolio. Nvidia owns a bunch of CoreWeave. I'm gonna use your referral. Hey, thanks so much, dude. Yeah, if you deposit $100, I think we'll both get like a fractional little piece of a share or something, which is cool. Anyway. Hey, what up? No Life, what's up, dude? So someone said STZ, 3 is heaven, said STZ stock. Actually, this will be a good way to show this off. So look, if we go, who just bought more STZ stock is actually the homie Warren Buffett. So if we go to Warren Buffett's portfolio right here, we can see his portfolio changes. We go to increase. One of the stocks he just increased his positions in is in the middle here, ticker symbol STZ Constellation Brands. Yeah, hey again, Steven, if you want to get this app I'm on, it's a brokerage. It's where you buy stocks on. It's in the link tree in my bio. It's that very first link there. So yeah, and these are all the stocks I own in here, but let's go analyze STZ right here. This is actually a drink company. Warren Buffett just bought shares. If Warren Buffett buys a stock, he usually does his due diligence. It's usually a good sign. He just bought UNH Group as well. But when we go and fundamentally analyze this, like if we just ignore the fact that Buffett bought this stock, let's just go analyze them the way we would any other company. I can totally understand why the stock is struggling right now. If we go to the revenue right here, it's actually like, this is the lifeblood of the company, the sales. The sales are actually down 5.5%. So they kind of lost their growth. Revenue's down 5.5. And if we look at the net income here, it looks really choppy. Like it's down 41% year over year. They lost net income last quarter. Then they made some and then lost $1 billion. If we compare that, it used to be a lot more consistent. They never would lose any net income, or maybe that occasional quarter. But this year it's been really choppy for them. So that's why, when you lose net income, you can't pay a dividend. You didn't make any net income to pay a dividend to. So that's why the payout ratio is all wonky. Hopefully that can start to normalize, but these huge losses that they're facing is going to hinder. Yeah, when you lose $1 billion, and the whole company's worth $23 billion, that's tough. And when the sales are down, we just want to see the growth come back for that company. I like the yield on them though. Hey, Suzuki Man said, I bought some tacos. They were pretty good. Hey, where'd you go? Nice. Hey, anyone, if you actually, y'all heard of Taco Bell has this like $7 like box, and I just got it like for the first time. It was really good. So yeah, here's who owns Taco Bell, ticker symbol YUM. 40% of the revenue is Taco Bell, and then 43% is KFC. So if you want to own KFC and Taco Bell stock, check out ticker symbol YUM. And this actually used to be owned by Pepsi. Pepsi used to own YUM Brands, and then they spun it off. And also, that's why you only see Pepsi products at Taco Bell and KFC. That's why you see the Baja Blast. That's why there's no Coca-Cola products. They have a lifetime contract where KFC and Taco Bell only serves Pepsi products. Okay, someone said Duolingo. This is actually a really cool software name, to be honest with you. This is a language learning app. You've probably heard of this one. And hey, yeah, P, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. But Duolingo right here is being heard by the AI thesis. They're saying ChatGPT, Google's new language learning app, is going to replace Duolingo. It might take some market share away, but for right now, like judging this company off their financials and fundamentals, this looks like a steal of a deal right here. This is a foremost subscription model company. Basically 85% of the revenues are subscription model. And this is what I don't believe. Like, this is what's so crazy. The growth is nuts. Revenue's up 46% after going 51, after going 50, after going 50. Like, it just hits a new record every year, every quarter. And not just the subscription revenue, but also if you don't pay for their subscription, you see ads, and their advertising revenue's up 55. Hey, Catherine, what up? And Agatis, hey, what's up? We'll look at those. Another thing we can see, so revenue's up 41, but net income is up by 83. So that means they're expanding margins. The FCF, which stands for free cash flow, is also insane, up 60%. So everything here, in my opinion, is headed in the right direction, but it's the sentiment around AI. Like kind of like the thing, they're kind of seeing the same problem Adobe's facing. Like, will ChatGPT replace Photoshop in 10 years? Will we need it? Will we need Duolingo? Or will we have to have a paid version? Will we have to pay a subscription to learn a language? Or will AI make a free app that's just as good? That's just as I don't know. So there is uncertainty, and always do your own research and maybe keep it as a small position. I wouldn't definitely have that as like a full-size position, maybe a small little thing. So someone said ASTS stock. So this right now, they are in the most crucial phase ever for the company. So there's good news and bad news. Well, actually, it's not really bad news, but this is a startup. ASTS Space Mobile is a startup right now with $1 million in revenue a quarter. It's nothing, but here's the super interesting part. Check out what analysts expect the next 2 quarters as they finally recognize their contract revenue. Revenue's going to go, it's 1 million this quarter. Next quarter, it's 25 million. It's never even been close to that before. Like, they're basically transitioning from a revenue startup to getting real revenues in 2 quarters. So what I'm saying is, be ready for a ride the next 6 months in this stock. We don't want to see them miss expectations, especially with how much the stock has already rallied. Because again, they have a huge market cap, literally infinite valuation, infinite PE, infinitely expensive PE right now because they don't make anything, no revenue, but it's the forward growth that's being priced in. And we don't want to see them miss on the forward growth expectations. Hopefully that was helpful. That's a space company. They do like rocket launches and stuff. Hey, brother, do you have Google Class A or C? I have GOOG. So I have the non-voting class shares, Google Class C. And honestly, it does not matter which share you buy. They move exactly the same, like maybe less than 1% difference sometimes, but GOG or GOGO, no matter which one you buy, it doesn't matter. Yeah, they're in my dividend-only portfolio. Yeah. Every stock in here pays a dividend. You know, McDonald's, Google, Meta, Carlisle. How's the Roth IRA doing real quick? Oh, a stock I bought today. Someone asked me, what did you buy today? Literally, I had some extra money. So I bought a fractional share of McDonald's, and then I bought a fractional share of Wix, 0.3 shares of Wix today. They're like the only publicly traded vibe coding play, which is pretty interesting. I'm going to make a video about that soon, Wix.com. They just did an acquisition of this company, and they're expecting synergies of like, they're implementing it with their 300 million e-commerce users. Like, I can't wait to see the future growth of this company. Like, the revenue's all right. They're now profitable as well. If you go to the net income, they're actually making net income every quarter. But yeah, look at that. So, but they're expensive right now, but they're super expensive right now, but I think it's justified. I would have them as a small position as much as I love them. What up, Rob? I told you I have an infinite headwind of articles, AI steal. Yeah. Oh, you're talking about Duolingo, I think. Yeah. So, Celerate, what up, dude? So, he said PGY. Is that? Oh, this is Pagaya Technologies. They're on my watch list, actually. So, you must have convinced me in this stock earlier. So, I remember looking at them, but I've completely forgot about them. If you look in the top right, the market cap, they're a $2.25 billion company, but they've had a nasty little downtrend the past couple of days here. Let's go look at their, there's no earnings reports either. So yeah, let's go look at their financials. Yeah, by the way, I'm at a hotel right now, and the Wi-Fi just does not want to cooperate with me. So, by the way, if you want to hit the follow button, we stream every day. Even though I'm here, I still wanted to stream anyway. I love streaming. I appreciate all y'all being here. But check out the growth here. The revenue's up 31% after going 31. Like, that's some good growth. That's really good. 31 after 31. The net income was positive 16 million, positive 2 million. They basically, this was a tough buy a year ago, burning through net income every quarter. But in the past 2 quarters, as long as they can keep that up, like, maybe they're going to stay net income positive. Yeah, analysts are expecting that. If we go to the EPS projections, they're expected to basically stay net income positive for the rest of the time. Wait, 29 cents of EPS. What was it this quarter? Has it ever been that before? They're going to get a record EPS. So they're going to have... That's really interesting. So you're basically transitioning... I got to do a $2.2 billion company, maybe making 50 to 100 million in 2 years of net income. It still might be a little pricey even at right now's after fall. So that's probably why I fell 7% today. I'm looking at Halberton right now. Hey, if you want me to look at a stock, give me the ticker symbol. I don't know what that is. Give me the ticker symbol and I'll find out for you. So yeah, no problem, John. How do you pick your stocks? Well, basically, just how I kind of do it on the stream. And I have a YouTube video as well. If you just go to my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you just type in Nathan Robert, how I analyze a company or how I pick stocks. It's either one of those two. I made it like a month and a half ago. Doesn't have many views. By the way, I'm trying to build up my YouTube channel. I don't get many viewers on there. I'm streaming on there as well. If you missed anything and want to replay the stream, go to my YouTube channel. It's called Nathan Robert. You can just type into YouTube Nathan Robert. It's also a link to my bio. But anyway, sorry. Here's KBE stock. This is the Spider Bank ETF. So let's see what the expense ratio is. 0.35% expense ratio. But yeah, here's what it owns. I'm surprised JP Morgan isn't the largest holding. Well, it's equal weight. This is like an equal weight bank ETF. I almost don't like that. See if you can look this up, Looney. See if there's a market cap weighted bank ETF out there. Look that up for me if you can. Market cap weighted bank ETF. And I think that I would probably buy one of those if I wanted exposure. My Spotify just started dumping. Yo, Danny, what up, dude? It's been a long time. Good to see you. One thing that kept me out of Spotify, great financials, great fundamentals, but the fact that their moat is like slowly going down. Like, I use YouTube Music. YouTube Music is literally identical to Spotify. It has more selections of music and podcasts than Spotify does because you can just pull up any YouTube video. But Apple Music as well. Like, they basically have a commodity at this point. But and they don't even own the music on there like YouTube does. Universal Music Group actually owns it, which is a private company, one of the biggest ones out there. Sharkwater, what up, dude? He said NLST. It's a penny stock. Made a nice 10% run. NLST. Wait. Netlist. So yeah, we don't really, $250 million company. If you're just trading this one, then we won't really cover it. Yeah, you're right. This isn't really the kind of stock that you want to just buy and never sell for the long run. Let me verify that. So they're a $200 million company and they actually $41 million of revenue. That's pretty good, but look at their balance sheet. So that's not good. They used to have, look at that, more assets than liabilities, but now they have significantly more liabilities than assets, the most ever, 142% leverage. Not great. It's probably just from these net income losses. When you lose net income like this, the money has to come from somewhere. But good news, the net income losses are narrowing. Yeah, that is real. Net income losses are narrowing, and the revenue is okayly growing. Oh, well, wait, hold on here. Let me look at this on an annual basis. So we're kind of comparing to a whole. So we're still down from 2022. I don't know. Yeah, I'd be so careful with that name. I did options. Hey, what up? Fear the Kirby. Hey, what up, Kirby? I did options for NVDX. This sounds like some NVIDIA like leverage. Okay, yeah, 2X NVIDIA ETF. What's cool about this is I also like doing that I haven't done this in over a year, but I used to, for like Tesla stock, for example, I was looking for something volatile to trade. Let me see if I can pull up just options. I always bought TSLL. Dude, my realized profit and loss from options all time is negative $400. So I'm not good with options. I don't do it anymore, but it's way cheaper than doing calls on actual Nvidia, because Nvidia stock price is 180. Well, look at this one. It's only $18. So the contracts are cheaper, and it's almost better because they're actually going to move more than Nvidia because it's 2x. So that's something you completely trade. You never just buy and hold that. It's interesting for options, and I don't do that. I don't do options anymore, but I know some people might be good at that. And sometimes it's, you know what I did with that Tesla call when I bought that TSLL. I literally spent, I think it was I bought two $40 contracts. So I was like, it's $40. I made that today. Might as well splurge on an option, and it didn't work. It went down 50%. But anyway, let's keep going here. Yeah, TSLL until Tesla gets to 500. Well, I don't think so. I would rather just own actual Tesla if I really thought it was going to 500, because when Tesla gets to 500. Like if Tesla exactly right now has to double to get to 500, and I know it doesn't, but in the 2x leverage ETF, you might also only be up by double, even though it's a 2x leverage ETF. In a down market, they get destroyed, and to recover the money it lost, it takes so much more. And so that's why you always see the 3x leverage ETFs always spiral to zero. So not financial advice, just know the 2x, the 2x's are a little slower, but the 3x leverage ETFs always spiral to zero, just from the nature of them. Because whenever it goes down, 30%, oh wait, is it SQQQ? I think it is SQQQ. These always, even though it hasn't fallen anyway, just don't buy these trading vehicles. I just started the other day. What should I buy? Hey, what up, Anthony? That's awesome. Your future self will thank you. But, not financial advice. I just put the backbone of your portfolio in just the S&P 500. Then after you buy the S&P 500, buy some individual stocks that you know and love, that you actually use. Like if you're on Instagram, Facebook, buy Meta. If you like YouTube, or Android, buy Google stock because they own YouTube and Android. Like McDonald's, buy McDonald's, invest in what you use. And I'm not just saying that, I follow that same principle. Our house's utility bill, our natural gas bill is through Constellation Energy. So I decided to buy some of this company. Well, that's not the only reason, because they're a great financially sound company. United Rentals, rent stuff from them. So why not buy some United Rental stock? Rented a porta potty from them. Carlisle. Anyway, I have Amazon as well. I own Amazon stock in here, pay for this Prime subscription, Coca-Cola Consolidated. I love all their products. They even beverage for Monster Beverage and Keurig Dr. Pepper. They're just a beast of a company. Anyway, let me stop rambling here. Let's keep looking at some of y'all stocks. Let's do it. So, Rich Dollars, what's up, man? And Mike said, thought too early for KVU. Here's the thing about this stock. Tylenol litigations aside, because, this is the company that owns Tylenol, by the way. If y'all, the president just came out and said it causes, well, actually, I don't want to, I'll get in trouble. Last time I said this on TikTok, I got in trouble. Basically, they want to slap don't take while pregnant label on Tylenol. I don't want to say what it causes because I'll get in trouble, but I think y'all heard the news. But check this out right here. A lot of people like this one for the dividend because you get a 5% yield here, but the dividend is a bit at risk in my opinion. There's a lot of risk here. First off, there's the future Tylenol litigation risk. There's a risk of that. Before this Tylenol stuff even happened, this isn't even a growthy company. The revenue's down 4% year over year. This was a spinoff from Johnson & Johnson, and Johnson & Johnson gave them too much debt in my opinion. So it's tough. And if we look at the net income right here, this was actually the first time this year they could afford the dividend. Because if you look at the previous quarters, they always made under 400 million, easily over. But this quarter, they made 420 million. And technically, even though they made 420 million, they only retained 20 million of it. Because if we go to their cash paid dividend, they literally have to pay out exactly $393 million every quarter out to dividends. So yeah, they made 420 million in net income this quarter, but 400 million of it is paid out to a dividend. So they literally only retained 20 million of it. That's they basically broke even. They're in a tough position. I like some of their brands. They own Listerine, they own Neutrogena, they own Tylenol. Oh, what's Band-Aid? I forget some of the other ones, but they own some popular brands, but I just don't, there's a bunch of risk there. And I think I would wait for sure. Hopefully that was helpful. IYF. So this is the iShares finance. Yeah. Now that is the bank ETF that I expected it to look like. Now, and this doesn't even include the dividend. Even this, yeah, you still get a 1.26% dividend yield. Yeah, Berkshire Hathaway. Oh, BRKB is its largest holding, then JP Morgan. It's market cap weighted. Now, this is the bank ETF that I would choose because it picks the ones at the top that are too big to fail. That just slowly keep on gobbling up smaller banks. So IYF is probably, and it only has a 0.03% higher expense ratio. That's so worth it. You pay $3 more in expense ratio fees for the market cap one. I'd rather buy IYF. Hey, thanks for that, Looney. Thanks for looking that up for me. I do appreciate that. I'll actually put them on my watch list too. It's nice to be green when the market indices are red. Yeah, hey, I feel that. Well, actually, we are technically down on the day. If you look in this portfolio, though, we are up 0.3%. So, hey, we're up at this portfolio. But yeah, if we go to our main dividend growth portfolio right here, we're down 0.68% on the day. Our Roth IRA is down 0.5. It looks like we're having a little recovery right now. Let me check the S&P real quick. Okay, Spy pumping. Let's go. Hey, what up, big man? So hope you're having a great Tuesday. Yeah, look at that. We're seeing a little bit of a recovery on that. Oh, that can't be right. Yeah, dude. Oh, there we go. We're almost green on the day. Isn't that crazy? S&P's only down 0.02. That's quite interesting. Let me check my Webull portfolio as well. Are we almost green in here? I have so many different portfolios. This isn't good. But yeah, we have a 0.7, or we're down 0.7% on the day. Dude, Robinhood is my first ever 10x stock. We just, for the first time ever, hit a 10x return on Robinhood. They're at an all-time high today. UiPath had a decent day. It's our biggest loser. They're upset. Wow, they really lost all their gains. I remember I sold them this morning when they were up 20%. I could honestly buy back in and just make myself 13% and still have the same amount of shares, but I don't want to add more to my UiPath. Do you play new crypto treasury companies? Not really. Crypto treasury companies. Oh, you mean like BMNR, Circle? This is a stablecoin company, which is pretty cool. If anyone's heard of USDC, like one of the top crypto market caps, it like pegs to the dollar. Circle's the one that owns and runs that, which is pretty cool. Do you have any drone plays off the top of your head that space is exploding? So I have a very small one for you. That's not. I'm still looking for a better drone play, but this one's all right. This is Red Cat Holdings. They actually just got their Black Widow drone NATO approved, so they can actually now sell this to other NATO members. Oh, and look at that. Red Cloud partners with, Red Cloud? This is Red Cat. So I think they got the call. All right, there you go, AI. But anyway, check out the next couple quarters. This is what I find so fascinating about Red Cat specifically. One of the reasons the stock is really momentum to all-time highs because this is a crucial pivot point company. They did $3 million in revenue this quarter. Like these are disappointing numbers, a couple million a quarter, but check out what's next quarter, expecting 25 million and then 45 million. If they do 45 million a quarter, that's 200 million a year. And what's the market cap on this sucker? 1.2 billion. Red Cat's worth looking into, but it's going to be so incredibly risky these next 6 months. Is if they miss these expectations while already pricing in meeting it, we could be in some bad news, but there's a drone play for you. Selling to other NATO members, the government. All right, what is DAX40? Give me the ticker symbol. Hey, Brick said HubSpot. Can you check that out? Yeah, isn't this like a Salesforce competitor? This is like the smaller version of Salesforce, I believe. And, another company that business relies on the white-collar job market. So dang, they're down 10% in the day. They're still a $25 billion company. Let's go look at their financials, though. So that's what I'm curious to see. So the orange line is what the analysts expect. They've beat every quarter on revenue. They beat on net income this quarter, and they beat on EBITDA. So revenue's up 19%. Are they net income positive yet? Guess we'll wait for this net income to load and find out. Is it a good time to invest in Amazon? I think so. If you have the intention to trade Amazon, it could maybe go down in the short term, but if you just plan to never sell Amazon like me, it's worth buying right now for sure. Not financial advice, of course, but it looks like Hubs is just now getting profitable. Salesforce just got profitable basically a year ago, so Hubs is now following that. I believe it's just a marketing, sales, service, management, integration. So pretty cool. Wait, where does the revenue come from? Let's see. Market. So 57% from the US, 16% Europe, Ireland. So yeah, it's like a smaller sales force. Hopefully that was helpful. I like the growth on them, and they're just not getting net income positive. FRMI stock. What is FRMI? Can you please analyze HAL? Oh, yeah, we'll look at HAL after this. I got you. Oh, this is an IPO right here. So they're looking, this is a very small one. If you look in the middle here, the market, oh, no, I was looking at funds raised. No, the market cap will be 12 billion. Actually, that's a big market cap. They're going to be a $12 billion company. What are they? Advanced Energy Ultra Scale Development Company, AI, 11 gigawatt, hyper redundant on-demand power. I don't know, some sort of power company. So let's look at HAL right here. What is this one? This is Halberton. Okay. So unfortunately, is this one of the mall stocks? So yeah, here's the thing. They just don't really outperform in the long run. Like, did you know the stock right here, HAL, is literally the exact same stock price that it was back in 1997? So, hey, yeah, Charles, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage. And hey, Ariel, no way. Thanks so much for the 7 roses. Thanks so much, Ariel. I really appreciate that. So yeah, anyway, here's Halberton. Let's go look at their numbers. Let's see if we can figure out what's going on here. So, this is actually an oil and gas company. So, that also makes sense. The oil and gas companies also just don't outperform the S&P 500 in the long run. But usually with these oil and gas stocks, you get a high yield. So let's go look at the yield. A 2.8% dividend yield, safe payout ratio. Can you get this in the EU? I actually don't know. I know it's for US, Canada. I'm going to just say yes, but anyway, yeah, I can kind of see why this company isn't doing so well. But this also isn't entirely their fault just because the price of oil, but the revenue's down 5% year over year. So revenue's down 5.5, but good numbers. These are good net income numbers, but the margin's falling more. Yeah, net margin fell to negative 28% year over year, but they're still making, look at that, like a couple $100 million in net income a quarter. Last quarter was tough, only 200 mil. Well, a 3% margin that quarter. Hopefully they don't get any more of those type of quarters. But honestly, if you're looking for an oil and gas play, don't buy that one. I'd rather buy a Chevron, an Exxon. Warren Buffett approves my message. If we go to the Warren Buffett portfolio right here, he owns some oil stocks because they have decent yields. The two that Warren Buffett owns is actually Chevron and Oxy Petroleum. That's 6% of his portfolio and then 4%. Basically 10% of his entire portfolio is in oil. It probably grew to that position. But let me look at Chevron, for example. What's the yield here? So remember that Halberton had like a 6% yield. He sacrificed a little lower yield, a 4.32% dividend yield. Still a good yield for one that actually has better stock price appreciation. Remember that stock was the same price that it was back in 1997? Well, this one looks much better. All right. Also, I'm very curious, when do you ever sell stocks to make a profit? What if I need it for housing? Well, hey, yeah, there's always the what if I need it for, yeah, that's all right. But I only sell a company when I really don't believe in it anymore, because I know I have new money coming in every month. If I really have a huge expense coming up, I'll just stop and I won't sell my stocks. I just won't invest anymore. I'll just build up my cash pile. When I'm able to do that, because sometimes you do sometimes you got to withdraw a dividend you received, or I've been there, done that. So so let's look at Celsius right here. But genuinely, you try to, for great quality companies, you try to just want to never sell them. So here's Celsius right here. They've been through some interesting news the past couple of weeks here. So Celsius just got a 6% stake by Pepsi. So Pepsi now owns 6% of Celsius, and for that exchange, Pepsi gave them Rockstar Energy. If anyone remembers Rockstar Energy, they kind of lost to Monster Energy, but that'll add even more growth. So that hasn't even been added into this quarter yet. They just went through another acquisition. So if anyone's heard of Alani before, Alani is like a really big energy drink. Alani owns 8.7% of the shares. After Celsius bought them, they still have a little bit of ownership, but which is good, and they should. But that just led to so much growth. That's what happened to their balance sheet last quarter. If you're wondering, like, hey, why did their assets just from last quarter go up from 1.8 to 3.8? Well, that's because they just acquired Alani. You can also just see that by going to the cash from investing activities. Remember, if this is negative, the cash from investing activities number, you always want this to be negative. That means they're buying assets, buying new companies. So that's when they bought Alani. If this number is positive, that actually means they're actively selling out of their assets. So you don't want to see that. That's the cash from investing activities. You don't want to see the cash from operating activities negative. You also want to see the cash from financing activities negative, because that means they're being shareholder friendly. But usually if they're doing an acquisition, like they spent $1.3 billion buying Alani, they needed to raise some cash. So they did raise some cash. If they rose cash either through debt or stock issuance, this was positive. I'm kind of explaining the whole cash flow statement here. If anyone's never heard of that before, I always like looking at the cash flow statement. I love looking at all the financial metrics. But yeah, Celsius looks like the growth is finally back. They're net income positive now. And Pepsi should help them with their distribution and manufacturing. So pretty cool. Pretty cool. Where do you get great news, for example? The new EA move, where could you read that in? Well, actually, I actually get my news like on this app that I'm on right here. Like I click the news tab right here. You can see like literally if you click latest, there's headlines right here. Like you can scroll through and read, but it literally has like what's this called? Like this box or whatever, like the exact, whenever there's news. And then you can select it by watch list. So it'll only show news from stocks on your watch list, which is pretty cool. You can see earnings as well. Nike's about to report earnings. Is that today? Actually, maybe go check that out. There's so many cool features with this app, which is cool. Oh, and then another cool thing, if we click on the markets tab right here, if you're looking for certain sectors and stuff, I'm going to pull this up. Sorry, by the way, I'm at a hotel right now, and dude, this Wi-Fi is bugging. So, by the way, if you wanted to follow button, we stream every day. I sell nothing, of course. I have no course, book, WhatsApp, anything like that. Yeah, hey, Chris, I do have an affiliate link, though. Like, if you wanted to get this app I'm on right now, if you go to the link tree in my bio, the very first link there is you can get this app I'm on. But yeah, you can select by sector. There's so many cool, like sectors. You could, drone concept stocks. We could maybe look in here. Yeah, Kratos is good. They have a good, but anyway, you can just find new stocks that you've probably never heard of before just by going into here. Like, anyway, there's so many. But the cool feature, I was trying to scroll down here. Oh, you can see the institutional tracker. Dude, I could spend all day just going over all these cool features, and they're so interesting. But we can see the interest rate cut probability. Yeah, hey, again, this app is in the link tree in my bio, first link there. It's free. But if you look at this right here, on October 29th, there's a 96% chance of a 25 basis point cut. Pretty interesting. All right, so let's see here. I've been begging for not. Hey, I didn't know. I thought you were just kind of. Is that a ticker symbol? Yeah. Hey, dude. You said I've been begging for that. Can you check it out from yesterday? Yeah. Hey, I don't know what that is, dude. I looked that up. I can't find that. Sorry. All right. Yeah. Hey, no problem. What's the app asking me? Oh yeah, hey, this is a brokerage right here. So yeah, this is an app where you buy stocks on, by the way. So yeah, if you want to, you don't have to deposit money or anything. You can just use it for the features. But yeah, a lot of people like it for just holding your cash in here. Like this is where I keep my idle cash as well, earn the daily interest. So Porsche stock. Oh, wait, Porsche. Well, P911. Oh, hey, I needed the P there. Wait, P911. Let me just type in Porsche for you. You know what? I'm going to find it for you. It's some weird ADR. I know, okay, so here's the ticker symbol you were looking for. It was POAHY. So they're actually on my watch list. So here's Porsche stock. Unfortunately, they're pretty much at an all-time low right now, lower than they were back in 2008. So you bought the stock in 2008, you're actually down on your position. So, it's actually done better than Ford. If you bought Ford in 1997, okay, you car company. Development manufacturer of core automobiles, yeah, this is them. That's unfortunate. Looks like they had some sort of like net income 22. Like they're normally making a lot. Ignore this one quarter. There must have been some sort of one-time adjustment where the net income went down a bunch, but the assets on their balance sheet fell by 22 billion. So some sort of bad news there. This is European. Oh, first off, we need to convert the currency from European to USD. So first off, you're paying an ADR. I don't know, to be honest with you. Here's the better stock. Don't buy Porsche. To be honest with you, the better version is ticker symbol RACE. This is Ferrari. And you know what's so cool? They're doing much better than Porsche. It's actually insane. Ferrari's customer is like recession proof. Like even if we're in a recession, those rich customers are most likely even richer that's why RACE has done so good. And they just have great fundamentals and a nice dividend. So Noah said ET. So I'm actually going to give you a quick warning on this. Just download a Moomoo I can access here. Hey, nice, Charles. That's what's up. So yeah, here's Energy Transfer. This is actually a company to be aware of. You buy it to maximize your dividend, but this isn't a stock. If you didn't know, this is one of the very few companies out there. There's no other stocks we've really looked at today that are like this. So if what I'm about to say scares you, don't worry about it. You'll kind of know when you're buying an MLP. But this is an MLP right here, which stands for Master Limited Partnership. So you're not buying stock. You're actually buying units. So whenever you buy shares, you're technically now a partner in the company, a partner. And so you know what? They send you a K1 tax form. Can you believe that? Just from buying this stock, they literally send you a K1 tax form. They're notoriously hard to fill out. If you got an accountant, don't worry about it. But look at this right here. I accidentally bought an MLP my first year. It cost me $200 with an accountant, but because they're an MLP, you get a crazy yield, a 7.63% dividend yield. This is an oil gas pipeline company, and they're taxed as MLP. So yeah, I'd rather, if I wanted exposure to that, I would buy a MLP, which this is the MLP ETF. It owns a bunch of MLPs, and it doesn't give you a K1 tax form. And Energy Transfer is 12%. So look at that. You still get a good exposure to it. If you put in $100 in this ETF, $12.50 of it still goes to ET. Hopefully that was helpful. Sorry, guys. I'm a little sick right now. Appreciate y'all. We'll probably be streaming for another 10, 15 minutes. If y'all got any more stocks you want me to look at. Let's get, what is Intelligo? Hey, what up, Train? If you let me know the ticker symbol. I don't know what that is, but yes, the audio is choppy for me too. Really? I hope. Let me know if it's really choppy. That is. Okay. Okay. All right. Yeah, I need my ginger tea right now. I need my turmeric tea. Anyway, let's see. INT. All right, let's see. Yeah, if you guys got any last minute stocks you want me to look at, let me know. Yeah, hey, PB, I totally agree. This app does have the best chart. So I typed in INT. I actually can't find that stock, but you know what? We'll pull up into it just because I want to. Yeah, there's so many ways you can do. There's so many things you can do on the chart right here. Like, of course, you can change. Sometimes I like looking at the average candles. The average candles are kind of sexy. But here's a cool feature. There's the trend projection. So where it basically, I don't ever really look at this, but it looks at the chart of other, if this is more technical analysis, people, it looks at charts that look nearly identical to the chart it currently has and kind of predicts what it's going to do next. So, yeah. And there's so many other tools I could do. If you want to learn more about this app, I have a YouTube video on all the cool features in the link tree in my bio. But anyway, let's keep going here. This is Intuit right here. This is the company that helps you with your taxes. You know, they also have a partnership with Robinhood. We'll look at Apple after this. And hey, Clem, what's up, dude? Thanks for that. So Intuit right here, look at this. You get a 0.6% dividend yield. They pretty much make all their revenue that one quarter. So this is their annual. So on it, first off, if you look at it on an annual basis, this looks incredible. It literally just hits a new record every year, every quarter. And if you look at it, that's their global business solutions. Where's their like tax business? It usually should. Oh, so it shows up in the net income. Well, basically, look at this. You can kind of see. You can probably guess which quarter every year is tax season. But yeah, they pretty much make all their money in Q3. So, and the Q3 net income grew by 18% after going 15, after going 16. So these continuing the growth in this quarter, even though this is their main quarter, they still did 400 million. This is one that's on my watch list. Basically, it helps you with your taxes into it, TurboTax. So let's look at Apple right here. Ooh, and then someone said Shopify. I'm pretty sure Shopify just went to a partnership with OpenAI. Or no, it's about to happen. On OpenAI, you can now shop things on single item stuff on Etsy, on OpenAI's ChatGPT, and soon you're going to be able to buy stuff on Shopify shop items on OpenAI too. Anyway, Apple, here's them. Perfect buy and never sell stock. I mean, if you're looking for a stock to buy and never sell, this is one that I'd choose as one of the picks. You know, Google's a never sell, Amazon, Meta, like these are all never sells. Like you don't trade these. Like you can trade them because they're so liquid and easy, but still have a perma-long shares, in my opinion, not financial advice, of course. You know, Mag 7 company, a lot of people are locked in the Apple ecosystem. They have a 17% smartphone market share. Legit half the revenue comes from the new iPhone. Not new iPhone, but from the iPhone. 47% comes from the iPhone, but the new iPhone actually had surprisingly good results where Apple had originally made a certain amount of iPhones thinking like this was be the amount, but they actually had to emergency produce more iPhones for the new iPhone 17 or whatever. So I heard maybe because the last one didn't have the best AI. I don't know. Anyway, that's just one part of their business. So a lot of people will continue to always buy an iPhone. But anyway, the most valuable part of Apple, if you didn't know, is their services business. If you go spend $100 in the App Store, like if you can spend $100 on Clash Royale gems or something, $30 of it goes back to Apple as a legit 100% developer royalty, just like ecosystem royalty, because they're on Apple's App Store. They just have to pay them instant 30%. That's their highest margin business, because they're selling hardware isn't super. I mean, we can see the margin difference. I think it breaks it down right here. Yeah, look, the gross margin difference is 35 versus 75. It's insane. But yeah, they sell Macs, wearables like the AirPods, and then also the iPad revenue. And also, here's why Apple's a bit affected by tariffs. And hey, what up, Seuss? Only 36% of the revenue comes from the US. How's Mabel? And but yeah, 26% of the revenue comes from EU, 17% China, 8% Asia. So that's why Apple's a bit affected by tariffs. But here's what's so great about them is how much buybacks and how shareholder friendly Apple is. So if you average it out here, they're, I mean, easily making 25 bill in net income a quarter. So what's Apple doing with 25 bill in net income a quarter? Well, if you look at the top here, they literally just spend it on share buybacks. It's insane. The dividend only costs $3 billion, or basically $4 billion a quarter, because they just rose it. They legit could 3 to 4x their dividend right now. They just choose not to. They do the right thing. Instead, they do share buybacks and reinvest in the business and invest in AI. So yeah, 0.4% yield, but they raise it every year. They could triple it, but they choose not to. So let's look at Shopify here. And Pfizer just got positive news. What do you think of the company long term? Yeah, we'll look at Pfizer too. They're like a dividend play, because their yield is like a 7% on Pfizer. It's pretty crazy. But there was some news like they wanted to lower prices of prescriptions. But let's look at Shopify right here. Yo, user94, you know who owns Shopify is Cathie Wood. And to be honest with you, she kind of lost a lot of respect because Cathie Wood's ETFs have massively underperformed. But one of the stocks she owns, and it's been a great pick. Same with Palantir, Robinhood. She has some terrible picks as well. Like, well, I don't want to get in that, but what was it? Teladoc, Zoom. Yo, who's the idiot that like followed Cathie Wood into Zoom and UiPath? I mean, I need to know that person right there. But also, I bought some Robinhood as well. I didn't exactly buy these stocks because Cathie Wood did. But anyway, here's Shopify right here. I do really love Shopify, and they just did the OpenAI partnership. Poe just said what app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Oh, wow, look at this. OpenAI integrates direct shopping feature with Shopify and Etsy on ChatGPT. That's what I just said, so pretty cool. That's the news tab right there, but let me show you why. I like this one from a fundamental point of view. This is the kind of growth I want to see. Like, this is the annual revenue. In 2019, it was 1.5 billion. Notice how it just, not even slowly, like just hits a record every year. Nice growth. So first off, they're making they're growing super good. They're also net income positive every quarter. If you look at last quarter, you see how it says they lost 680 million? It's actually a one-time gap, like realized adjustment from an acquisition. So don't even worry about that. You really look at the operating profit, what the core business did. You always the net income should always be just slightly lower than the operating profit, because the operating profit is basically the business core operations before tax. And the net income should just be the operating profit plus any tax, and interest. But that's why last quarter, when we see the net income, they lost 600 mil. They didn't actually. And also, if we look at the FCF, which stands for free cash flow, they're printing free cash flow. They're making a couple hundred mil a quarter. Yeah, hey, we need to know that person who followed Cathie Wood into those names. So yeah, anyway, Shopify is a great company. The valuation probably is too high here. I'd love to own them. I probably would own them if their valuation wasn't so high. But, I forgot to show their balance sheet as well. Dude, they have no debt. They have like $5 billion in cash and no debt. They're a beast of a company, like for real. Hey, speaking of, does anyone remember the Mr. Beast, speaking of Beast, the Mr. Beast Chocolate Factory video? The Chocolate Factory where he gave it away? That video is sponsored by Shopify. I don't know why I remember that. I have not seen that video in since the day it came out, and I just remember that. Okay, lots of AI data center companies moving today. Yeah, NVIDIA, CoreWeave. CoreWeave just signed a huge, the cloud names. Yeah, the servers are basically using their data centers as clouds. So CoreWeave just signed a $15 billion cloud deal with Meta. Can you believe it? And CoreWeave just got the deal with OpenAI, which NVIDIA just got a deal with OpenAI, gave it to CoreWeave, also did a deal with CoreWeave, and CoreWeave did a partnership deal with APLD as well. It's like a whole circular ecosystem right now. We love it. NVIDIA to 240. So here's he didn't say BBY. which is Best Buy. He said, is that Bed Bath and Beyond? BBBY. So yeah, Bed Bath and Beyond. This is a meme stock, no good fundamentals, trash company. To be honest with you, like you swing trade this. You never just buy and hold shares for the long run, hoping this will be a good S&P 5. If you're hoping this will keep up with the S&P 500, I just don't think that's the case. You know, this stock is lower than it was in 2002. You bought the stock in 2002, you're actually down on your position. But let's see. You know, this is a mall stock. They lose net income. Whoa. I mean, look at the decline. The revenue is down 30% year over year. So revenue's down 30, and they're losing net income every quarter. You got to be careful there. Their chocolate is garbage. What stock were we talking about when we were bringing up chocolate? Couldn't tell you. Hey, but what up, Ness? Hey, I like the name. So HOND, what up, Bobby? Is that a Honda or what is a Hond? Okay, so this is one of those acquisition holding companies. I can't remember the exact news, but either this company like bought a bunch of crypto or it like yeah, they did. This is a holding company, it like buys companies. So if you don't really look at their numbers, I can't tell you much about that stock. I apologize. They just bought something. Those are really confusing kind of companies. George, yeah, hey, absolutely. He said CAH. Dude, George, I forgot to say, and I gave you a follow, by the way, George. Hey, also, watch out for people impersonating me. I'll never follow you, DM you. If you get a follow from someone that has my name, it wasn't me. By the way, I sell nothing. I have no course, book, WhatsApp, literally nothing like that. So anyway, here's Cardinal Health. This stock is at an all-time high, but this is a 1% margin business, but they've been able to make a lot of money from it. Like if you go to net margin right here, I believe, not even, dude. The net margin is a 0.4. So if you go spend $100 at this company, you give them $100, $4 of it is net profit, is net after tax. But look, so they did look at this, 60 billion in revenue. Out of that 60 bill of revenue, 230 million or 240 million in net income. So at least this is growing. Like these growth rates are good. Like the margin used to be even lower, but that also begs the question: what if they're able to grow to a 2% margin? That would send them to over $1 billion in net income a quarter. So there is potential there. I think that might be one. It's honestly just this net income growth is probably why the stock is doing so well. Like it used to be really choppy, really bad numbers, but now they're making like some real consistent net income, you know, good growth rates. I think you get, 1.3% yield, only a 32% payout ratio. What's the sales growth? So pharmaceutical and specialty solutions. Revenue. Yeah, the revenue. So I want to also see the growth come back. Like the revenue is only up by 0.5. Like 0.5 doesn't really beat inflation. Leverage balance sheet as well. But maybe if they can expand their margin, what are analysts expecting? Well, I don't know. Maybe a little expensive. What do you think of cake? Yeah, hey, this is the Cheesecake Factory. This is another company that they've actually been holding up pretty good compared to all the other restaurants, but you know, this stock, you know, is lower than it was in 2015. So you bought the stock 10 years ago or 11 years ago, you're down on your position. These just don't outperform. So if you don't buy this, in my opinion, expecting to outperform the market in the long run, like if we look at the Cheesecake Factory's core, or just the Cheesecake Factory, because they own some other brands. But if we look at the Cheesecake Factory's revenue, like it's only up, like this is all single digits. It's so like boring to me. Like the revenue is only up 0.9 after it grew 3%. Like add inflation to this, like the revenue is technically down year over year. So they also own some other smaller names. Like I've never heard North Italia, other Fox restaurant concepts. Anyway, at least they're making good profits though. All right, what's the margin? Their net margin. So actually that's okay, but yeah, they're making like 40-50 million a quarter, and you get a dividend. A lot of people like them for the yield. 2% dividend yield, safe payout ratio. But to be honest with you, I'd want to see the growth come back. The Cheesecake Factory is just not growing that much. But I like the yield. I like the profits there. It looks like pretty stable. I'd probably rather buy like a Texas Roadhouse. I love that stock. You know, talk about good management here. TXRH, I think they've outperformed the S&P 500. Yeah, look at that stock. This one's done pretty incredible. A lot of the restaurants really just right now have been struggling. It's nothing like look at that. That looks great. It's nothing like them specific. Like look at Wendy's, dude. You want to see something sad? Wendy's stock is at an all-time low pretty much. So, yeah, look at that. That's tough. Can you please check mRNA for the long term? Yeah, hey, I don't think I will check that one. It's really not like it's not worth looking into. I wouldn't touch them as a healthcare play. Or fine, I'll be so quick about this mRNA. Like, here's why I think this is junk and it's at all the financials. If you ever, let me start over. If you're ever wondering why a stock is at all-time lows, if you ever look at a stock and you're like, how do they just continue to climb lower? Just go give a quick glance at their financials, and it usually quickly explains it. And if we last time I looked at this one, it was not good. So let's go pull this up right here. Sorry, by the way, I'm at a hotel right now, and also I'm not trying to be bearish. I don't like bagging on anyone's stock here, but here's the thing. First off, yeah, look at these net income. First off, they're burning through like $1 billion in net income a quarter. So that's not great. And whenever you lose net income, that money has to come from somewhere. So check out how the assets on the balance sheet just go down every quarter. So not great. And they're losing all this net income all for a business that's in major decline. Look at these growth rates all year over year. This quarter was negative 40, negative 35, negative 65, only up 1%. Like, this really benefited from COVID. Look at this, 2021. Look at the money they were printing. That's insane. But as that went away, the sales are now, went from 4 to 5 billion a quarter to 100 mil this quarter, 100 mil last quarter. You got to be careful with this name, I think. Maybe as a super, super small position swing trade, maybe I'd be careful just buying and holding for the long run. Nathan, I believe you. Check FCEL. That's a junk company. I actually had some free shares of this. Actually, let's see where I can. There they are. Hey, look at that. I sold it at, well, this is stock split adjusted. No way it was worth $55. But yeah, I shouldn't even be covering this, but here. If you look at the top right, it's a $240 million company. So think about this in the back of your head. The whole entire company is worth $240 million. And you ready for this? Look at the net income just this quarter. This is the reason why they're at all-time lows, and you can't trust it. Like, if you buy it, just know you could buy the whole company. Like, think about this. This is the valuation you're paying. You could own this whole entire company for $248 million. So let's say, bam, you just spent $248 million buying this business. Here's what you just bought. You literally bought a company that just lost $91 million in net income this quarter. In the previous quarter, $40 million, $30 million, $40 million. They literally are going bankrupt. Like the chance of bankruptcy here is like high, like higher than Snoop Dogg, like 100%. But it's just a pretty much momentum name right here. I'd be so careful with them. Just another kind of like swing trade or something. So anyway, I'm actually about to end the stream here. We'll probably look at one or two more. By the way, if you want to hit the follow button, we stream every single day. I will be streaming tomorrow for sure. IONQ, any feedback? Yeah, IONQ. That's a quantum name. Basically, they did something kind of smart because Amazon owns over 100 million of this company, which is interesting. But basically, this company just diluted every shareholder by $1 billion. They took advantage of the crazy stock price appreciation. They took advantage of the quantum momentum. And I'm really half about it in the stream because the Wi-Fi at this hotel is just terrible. But anyway, what was I saying? Yeah, basically, when this stock chart loads, it's going to be at all-time highs. Yeah, this is an $18 billion company. $18 billion company. They decided to dilute the shareholder by $1 billion and buy a company for $1 billion. So they just bought a company for $1 billion. Oh, before we go, I have a stock I want to share with you guys. It's kind of being hurt by AI. Can like ChatGPT make a domain name? I don't know, but here's a pretty cool stock that I think is at an okay valuation is GoDaddy. Actually, let me pull it up over here, the best app. IONQ, just momentum trade wouldn't touch them to buy and hold shares of. But check this out. This is GoDaddy right here. You've probably heard of them. They're like that website domain name. And look at the multiple. And this is real, not propped up on some adjustment. They're trading at 24 times net income. Now, this kind of on OpenAI and stuff, I don't think they can like make domain names, and I don't know. But anyway, the business, look at this net income. This is real. They're literally making 200 million plus a net income a quarter. They have good gross margins, 60% gross margins, basically 18% net margins. It's a good business. And analysts are expecting the net income to continue to climb up higher, and they're beating on expectations. So I put them on the watch list, probably might fall lower. AI might hurt them, kind of like a Duolingo, kind of like an Adobe. Will AI hurt it? We don't know. Will they be an AI winner or AI loser? Market's trying to price it in. They were wondering that with Google. Would Google lose its search share to ChatGPT? Well, turns out actually know Google Gemini is now the number one most downloaded LLM on the App Store, and it believe is more powerful and has better results. But they included AI into Google. Like whenever you go search something up on Google, it has like the AI results at the top. I love that. So it kind of like, anyway, they repriced them from an AI loser to an AI winner. So anyway, I'm gonna go, gotta go. But if you wanted to follow, we stream every single day, twice a day. The number one way to support me, by the way, if you want to support me, number one way too, because I sell nothing. I have no course, book, WhatsApp. I sell nothing. The only thing I do have is a YouTube channel. So best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type in YouTube Nathan Robert. I'm trying to build up my, videos over there. I barely get any views on there, and I barely get any viewers, but I'm streaming on there as well. So if you miss anything, you can replay it. Sometimes I talk too fast, and people like to go back if it's a cool stock they didn't get or something. But yeah. And if you go to after the stream's over, what some people do is when the stream's over, they go and leave a comment on the stream after I'm done. Like they rewatch it when the stream's over and they leave a comment saying, hey, can you look at this stock at the very beginning of the next stream? Then I'll look at that stock at the very beginning of the next stream. Anyway, have a great rest of your day. Oh, and someone said what happens is, yeah, hey, again, thanks for showing up. No, free me. K-Do, I'm ending the stream right now. I feel so bad. No way. Yeah, someone said what happens is, yeah, if you wanted to get this app I'm on, this is my favorite brokerage, by the way. If you look at the middle of my screen, you keep my idle cash in here. It's basically where you buy stocks. And if you're looking for a nice app to buy stocks on, I like this brokerage. It's in the link tree in my bio, very first link there. But anyway, yeah, hey, you too, egg mayo sandwich. That sounds really good. Egg mayo. Good combo. All right, hey, yeah, dude, free me. Don't worry about it. Hey, we'll be streaming the same time tomorrow. Hey, the Ace, no way, you were here too, hiding in the chat. Hey, I'll see you later. Michael Anthony, I feel bad too. No way. He said, right at the end, he said, I wonder why airlines are down so much, like Delta Airlines, ETF group. Why the big fall? I wonder that too. Maybe there was some sort of defense, or I don't know. Maybe some sort of bad news. That's a good question. Maybe